Well, it's the 2nd of November. It's covered in snow out there. It's Edmonton. You know how it is. How's things going with you? Are you doing well? I'm doing really, really well. You know, that seems to be a consistent trend with me. I hope you're much the same. Today we're going to look at some earnings. From today, actually. We're not missing earnings like we did yesterday, where we had to redo that one today. We apologize for that. Today, we're going to do today's earnings as well. Good for us. Thursday, November 2nd. You want to look down in the description below for all the little timetable where we're going to see where the actual earnings call are if you want to skip ahead. Otherwise, earnings from Alibaba, Royal Dutch Shell, Apple, Activision Blizzard, and a little bit of pumpkin spice for our Starbucks friends. Now, there were a lot of earnings today. Let's not get that confused. This is very much a streamlined version of it. If you want to go to the down here and pick yourself where you want to go. Otherwise, let's go for a ride through what I consider probably the most important earnings of the day. Let's start off with Alibaba from all the way across in the Orient. Alibaba EPS of $1.29, beat the street by 26 cents, revenues of $8.29 billion, beat by 440 million. That revenue number is up 60.7% year over year. Alibaba is such a strong company. Like, I know the rev number isn't crazy at this point at 8.29 billion. Like, it's not crazy, right? It's not doing anything that's blowing anything out of the water at this moment. But that growth and the way Alibaba is so entrenched where they're at, I mean, it's only a matter of time until Alibaba really becomes an international force, if they're not already. I mean, they are, but there's some people I still talk to, and they don't understand the whole concept of what they're doing. They've never heard of them. Like, it sounds, I don't know if it sounds foreign to people. Like, people just don't really, it doesn't resonate like an Amazon or an eBay or anything like that does, for reasons unbeknownst to me, because it is an entirely different kind of company that really capitalizes on the wholesale of so much. That Alibaba is a solid company that's going places. Licensed professional financial advisor, please do your due diligence. Speak to your professional, know what you're getting invested in, but Alibaba is always worth looking into. Core commerce up 63%. Cloud computing up 99% at Alibaba. Digital media and entertainment up 33%. Innovation initiatives up 27%. Those are some astonishing multiples to be up across all your segments. Everything's up. Alibaba is running an amazing company. It's amazing to be amazing, I would imagine. Apple, or no, we want to do Royal Dutch Shell. We want to keep Anthony in the game here, right? Sorry, Ant. Royal Dutch Shell, Ant. EPS, 50 cents. Beat the street by 5. That's up 47%, that EPS number year over year. Revenues of $75.83 billion. Yeah, Royal Dutch Shell pumps a lot of oil. That's up, or beat the street 3.21 billion, but that's up 22.6% year over year. Royal Dutch Shell's price point, much like we talked about BP yesterday, I think it was, where it's like $49 a barrel is like the break even. I mean, we're sitting around $60 a barrel here, roughly in and around that range. It bounces around there. Royal Dutch Shell is, I believe their break-even number was 50 a barrel, but they're killing it. I mean, the money is definitely being made again in the oil industry, especially at the very top end here, where the infrastructure is all ready to go. I mean, this was just basically you see it build up and you just implement everything that you've got. You've been doing this forever, right? So Royal Dutch Shell is doing a great job. Their net debt fell from 72.9 billion. It fell 72.9 billion to 67.7 billion. So they're in debt. They're a lot of money. I'm not in 67 billion worth of debt, but I mean, I might owe you a couple bucks, but they're in some serious debt. But they pulled that down. That's a big number to pull down. $5 billion worth of debt. That's a big number. So it shows how good they're doing, the amount of money they have to put back into that kind of stuff and not have to bring new debt in. But that's debt riddled. I mean, there's just no two ways around that, right? 28.38 billion in cash flow versus 23.5 billion last year. So again, the cash flow is up. I mean, that's a big number. That's 18%, 17%. That is a big number. Upstream made $562 million for Royal Dutch Shell. Last year in this quarter, it made $4 million. That's how you pick it up. What's that multiple? That's thousands and thousands, 10,000%, right? Downstream, 2.7 billion. Last year, 2.1 billion. It's up. It's up. It's up. It's up. It's up. It's really a matter of the price. It's really a matter of where you get in. If you believe anything about oil starting to come back, that oil's going to be stronger, whether you believe something to do with OPEC, like whatever you believe, you need to first off do the due diligence. You know this. Talk to the licensed professional financial advisor. Make sure that everything's on point. But I'm telling you that oil is making a move that's starting to become a trend. We see it up in the numbers. The rig numbers were up. The Baker Hughes rig numbers were up there. What was it? 25 straight weeks at one point they were adding rigs. I mean, I know it's been back and forth recently, right? Like that's going to happen. But there was a point in time where it was like that. For a half a year, it was like that. That puts a lot of eggs in the basket to start off with. Then you start seeing the quarters from BP, from Royal Dutch Shell. We've seen quarters from Exxon, from Chevron. We've seen quarters from some serious oil companies. And we're seeing good numbers. I know it's been scary to be in oil for a while. It's one of those things where they're great companies. They're not going anywhere. They're doing fantastic work, but they hold a lot of debt. Their price is still not cheap to pick up. Sure, dividends, it's all great, but right now, they look like they could potentially be growth stocks again for a period of time. If oil does decide to find its way to some sort of new high for a reason, you got to have a reason. You can't just assume that this is happening because it's happening, but there is somewhat of a trend. 2017 has set a bit of a trend going into 2018 that oil exploration all the way down through production to the retail might potentially be on somewhat of a comeback. I can tell you over at the gas station here, and I live in Alberta where it should be cheap, it's like $1.20 something. That's Canadian, so that's like 8 cents. That's like 8 cents for you, but for us, that's everything. That's what I make, like from my polar bear training job in a month. But igloos are cheap to live in. So Apple, we're going to look at Apple. But Royal Dutch Shell, seriously, if you're not in the oil and gas industry, this is probably the time to have that conversation. Apple, always a great company. We're expecting a lot, right? iPhone X coming out here. The pre-orders are off the charts. I think you're waiting 7 weeks now for a phone. So, that stuff is ridiculously good. We're seeing nothing but good stuff out of that. Apple's EPS, $2.07, beat the street by 20 cents. Revenues of $52.6 billion. These guys are sitting on, $100 billion in cash, too. It's unbelievable over at Apple what they're doing over there. Like, to be the number 3 smartphone maker, but to still introduce this watch and have that just go crazy. We've seen Apple, they don't need to expand so much. You notice how a lot of companies just need to do 100 things. They go everywhere, and sometimes they just get so spread out. Hewlett-Packard, Intel, there's so many of these companies where it's just General Electric. It becomes too much. It's too much to handle. Then they're selling off divisions, trying to clean house and really streamline everything. Apple is so streamlined, and they're just successful at everything they do. It's amazing. So Apple, $52.6 billion in revenue. That beat the street by $1.81 billion, and that is up 12.3% year over year. So Apple still, to this day, growing in revenue at a good clip. That 12.3% is a decent clip for a company that's just already outstanding. It's really a matter of price point again with Apple. It's tough to not like them. They're not the number one in the world in smartphones, but they are so much a part of society. I don't really see Apple going anywhere, especially considering the technology that they continue to put out continues to stay at the very top end of it, and we don't see anything trend-wise saying that that's not going to happen. In fact, every time they introduce something new, they seem to also be able to broach the top end of the market. So they're doing a very good job of staving off failure. Apple's doing a very good job of that. Revenues in the Americas up 14%, in Europe up 20%, in China it's up 12%. That's huge because that's right direct competitor to Huawei. That's the number 2 guys out of China, so that's big time. You're coming in taking some serious market share. Down 11% in Japan. And the Asia Pacific up 5%. So they're up significantly in Asia. Japan, though. Japan apparently not feeling it. Maybe that's a Samsung country. I'm not entirely sure. iPhone sales up 3%. iPad sales up 11%. They still sell the iPod. iPad sales up 11%. And Mac sales up 10%. So across the board, the growth is there. Great company. You're really looking at price point. Again, you know what to do, financial advisor, you know the whole deal. But Apple, excellent company. They are definitely worth looking into if you can get it at the right price or in a basket of other technological companies. Apple's something I'd like to own on my own. I mean, if you're going to really get into it and you're going to own Apple, that becomes a company I think that you find on the way down because of something, but you know in advance that you think that it's gonna do whatever for years, and you find a lull and you buy it as it's coming down. You find a price that you think is just comfortable, that they're going to always stay around or get up on. You just buy it coming down. I'd say it's a great company. It's so expensive now. It were Alibaba would be the company at all these things if I was looking at something that I would really, really look into, because I just see the revenue growth being, it's such a standout. They expand so drastically, and it looks like we could go into so many different directions because all the leverage that they're given because of the country that they operate and how that country wants to see them succeed. And we all want to see them succeed, right? I want to see them succeed for the shareholders. So that's perfect. So out of the three that we've talked about so far, the Alibaba, Royal Dutch Shell, and Apple, while all great companies, and these are great earnings calls, Alibaba probably the biggest one, but take this earnings call to the bank with you. This is definitely the one you should probably be talking to your advisor about. Activision Blizzard, earnings per share of 47 cents, missed by 2 cents. Revenues of 1.62 billion, missed by 120 million. And that's down 0.6% year over year. Their GAAP revs, though, hit third quarter records of 1.62 billion. So that's a record rev number. The GAAP rev number. That's still, I mean, Activision Blizzard's the man, right? I mean, at the top of the game as far as video games go, and they're on the very cutting edge of this competitive gaming. They've been doing it for however many years already successfully with StarCraft and all that, and they're just ramping it up because in the United States it's becoming bigger and bigger. And with mediums like YouTube, people really just gravitate towards this stuff. They love it because people love video games. I mean, they're fun to play, right? And there's such a variety of them. And Activision Blizzard owns so many good licenses, and they do just excellent work, right? They do excellent work. Their studios do excellent work. They make games that are almost geared towards not only the story mode, but good, solid, competitive gameplay against player versus player stuff. And it is helping the competitive game market grow exponentially. Activision Blizzard is definitely on the front lines of that. It's a company where I can see so much in the industry. I think the biggest thing is going to be you choosing where you think you should go with your dollars. A basket of funds might be a little more safe if you're looking to just get into the idea that video games are only getting bigger with digital downloads and the lack of having to package things and sell them at retail. Margins are getting better. It's an industry that's not going anywhere, right? This isn't the video game crash of the early 80s. This is it. Video games are here to stay, and they are here to stay in a big way. They're going to be a part of our lives in probably, I would say, a major way shortly as virtual reality becomes more and more prevalent and more cheap for the research and development. So Activision Blizzard, 348 million monthly active users. So not just 10 people playing. There's a couple people on there. If you're looking for some competition, there's a way to hone your skills, and there's a way to make a living playing video games nowadays. Can you imagine that when I was a kid? If you'd have told me that in school, like, Cody, what do you want to be, a fireman? Do I want to run into fires? No. Do you want to be a policeman? Do I want to run into people shooting at me? No. You want to play video games? They pay you for that? Well, no, not in 1988 they don't, Cody. But in 2017, you can be balling playing video games. Starbucks, earnings per share of 55 cents were in line. Revenues of $5.69 billion, missed by $110 million. That's off 0.4% year over year. I think the big news out of the Starbucks call, same store sales up 2% or something like that. Starbucks is really treading water. They're trying to figure a few things out. The big thing out of the earnings call was that Starbucks had sold Tazo Tea to Unilever for $284 million. So that's probably the biggest news out of there, Starbucks. I more got that in there for the actual sale to Unilever than I did for the call. It was a great day earnings calls. Those are huge companies, great calls. Again, we just look at the economy doing major things. It's fantastic to be out there in a marketplace like this where people are making money. We want you to be making money. Stick with Wall Street Breakdown. Make sure you're doing your due diligence. Make sure the proper allocation in your portfolio. Make sure you're doing all the stuff right. You know what you're doing. You're smart. That's why we talk about this stuff, right? You know what you're doing. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, notification bell, thumbs up for this video, all videos. Thumbs up for you because you're here grinding, trying to make this work. Leave a comment. We love hearing from you. Have an excellent Thursday night.